What's going on, everybody? It's Jeff here. Welcome back to the channel. I was discussing this earlier with someone and I really wanted to share it with you guys. I feel like the trading community, especially the day trading community, gets a lot of pressure, okay, that in order to feel like you're working, you're grinding, you're making any progress, you have to be actively trading. It also doesn't help whenever you scroll on social media, YouTube, Twitter, Reddit, wherever you are constantly seeing highlight reels of other people getting their 100%, their 300% trades. And it puts a little bit of pressure on a lot of people where they feel like they have to actively trade in order to give themselves an opportunity to make money. And I can't beg to tell you guys, there's nothing farther from the truth. Your job as a trader, okay, is to be able to come into the market, identify when there is an edge, and be able to execute on that. So I want to break that down for you guys in this video. It really changed my entire really trading career once I started to become a little bit more hands off and understanding the bigger picture. So I want to break that down for you guys. So first of all, if you take a look, this is the SPY as of right now. We still have about 50 minutes towards market open, and we're really just bouncing back and forth, bouncing back and forth. We have these kind of like these heavy knife candles. You saw a massive sell-off right here, just immediately getting eaten up. And here we are back sitting around that 413 level. And I said to everybody that, inside the group today, I said, listen, guys, we have CPI coming out on in 2 days on Wednesday. And, historically, a couple days before, it's really followed by this low volume chop. All right. Your follow throughs, don't really occur. There's a lot of fake outs to both the upside and the downside. Okay. And a lot of these heavy, knife candles that'll come in, and these false breakdowns that, we're breaking below this low right here, this 412 only to get yanked right back up. And this doesn't really provide a really good opportunity. And I noticed this specifically inside the indices. You do have, your individual tickers, which will trend a little bit differently. But I came into the day, with at least having this thought in the back of your mind. That's completely different than trading with bias. Okay. Trading with bias means, listen, no matter what, I'm not taking a trade. It is going to chop, right? Or no matter what, it's going to break out and I'm going to play calls to the upside, whatever that is. You don't want to have bias, but you always want to have a little bit of a lean, right? An indication, just to keep I always say, keep in the back of your mind. So that was in the back of my mind. Okay. And when you zoom out just a little bit further, I'll jump over here to the 1 hour for you guys and then zoom in for a little bit. You can see that we've really just been kind of range bound, chopping back and forth, and the market is looking for direction. You've got bulls and bears, bulls pulling back and forth. I talk about that 4150 level on ES, which is the futures, has been a magnet of quite some time, and you can see where we are. We're not trending up, we're not trending down, we're just kind of bouncing back and forth, and especially like I said with that, the awaited data. Okay, so always keep that in the back of your mind that the market is not going to give you the same opportunity every single day, and that's all right. While there are going to be people that are like, listen, we picked up calls from the bottom, got the 0 day, sold it for 100%, made $5,000, like that's great, but inevitably, like, you have to be able to stay in your own lane, right? Because those same exact people, when they're getting burnt on these 0 days trying to chase these chop days, they're not posting, hey, listen, I lost 5 grand, I lost 10 grand, right? So you're only seeing that part of the highlight reel. One thing I will point out to you is understanding these larger time frames. And I made a short video over on my Twitter, so go please take a look at it, but I'll break it down quickly for you guys. We're going to take a look at AMD here, right? So AMD has a massive weekly candle right here. You can go take a look at it. After earnings went all the way down to 81, and that weekly candle got bought in all the way back up. And this is a really strong candle, right? So I had that in the back of my mind. AMD is a really strong setup. I always start on the largest time frame, which is, for me, the weekly, go into the daily. I did notice on the hourly time frame, you had a little bit of resistance around this $91 level, right? It came up, sellers were strong, back up in here, sellers real strong. Once again, sellers strong. So I knew that we had to kind of break this area, right? So let's bring it over towards the beginning of the day. And this is the algorithm that triggered a short, and I'll break it down for you guys, followed by 2 longs. And this long obviously played out really, really nice. So I'm going to zoom in, make it a little bit easy for you guys to see. So right away off the open, this is it right here. That first candle kind of got bought up, right? We opened 930, came all the way up to this $91 level, massive wick, hit down really, really hard. And you can see this 89.50 level right here. That was kind of that support that we bounced off of twice on pre-market. It was a nice, pre-market level of support. We came back below. It looks like we were trying to curl, and sellers were still active as that level. Okay, so chances are, the algorithm, the way that it is designed, it fluctuates off of these both pre-market support and pre-market resistance levels at the top and bottom, and that's where the short that was triggered. We always talk about that confirmation bias, right? Don't be afraid to be able to get out of a short position, and potentially if another setup offers a good opportunity to flip that and be able to play the other way. I used to be able to hang on to these and be like, no, I'm just going to let it ride. I'm going to let it ride. It's got to go down. It's got to go down. And then here I am, losing 100% of my position and realizing why I'm not any profitable at all. It's exactly what the algorithm helps with. We came back over about 30 minutes later. Wait a minute, we broke above that 89.50, and now what was once resistance, 89.50, big wicks right here, now acting as support, algo triggers to go long. Now, I'm not mentioning to you guys, listen, every single time, a play doesn't work out and it goes against you, just flip to the other side. That is definitely not what you want to do. You don't want to flip flop, because then you might end up, yourself kind of chasing your tail, especially in some of these chop days. But knowing that when you're wrong, and knowing that being able to flip to the other side, and also looking at these larger time frames, we came into that knowing exactly what the weekly chart looked like. Massive. We knew exactly what this hourly chart looked like. Listen, once we can kind of break through this, maybe if we get rejected off the first time, the second time might offer another move to the upside. So guys, just keep that in mind. You don't have to take a play every single day. Also, look at these larger time frames, the daily, the weekly, the hourly. Understand when the larger time frames are trending to the upside, when a candle formation is there, right? When a pattern is trending. A lot of times people will look and be like, oh my God, the market is just massively selling off on a 1 minute, 3 minute, 5 minute chart, whatever you're using. But in reality, when you look at, the hourly, the 4 hour, the daily, it's just a brief little pullback. So guys, I hope this video helps. I'll see you in the next one.